Good afternoon, everyone. It brings me immense joy to extend a warm welcome to each one of you for another enriching session for the ICS special lecture. My name is Supradeep Das, and I am a research intern at the Institute of Chinese Studies, New Delhi. I am honored to serve as the master for ceremonies for today's special lecture. I extend a sincere and warm welcome to all those joining us for another insightful session of our special lecture series. The title of today's lecture is Building China's Landlord State, Laying the Foundation for China's Real Estate Boom. Over the years, China's economic landscape has been significantly shaped by the dynamics of the property market, from serving as a crucial pillar of post financial crisis growth to its current implications on economic slowdown. The real estate sector has gained immense attention. Today, we delve into how this sector became central to China's political economy, driven initially by industrial policy aspirations. We will explore the evolution of a state monopoly on urban land, the formation of a broad growth coalition, and the subsequent shift towards a turbulent real estate investment, and also unravel the complexities and implications of China's evolving landlord state and its impact on economic dynamics. The speaker for today's session is Dr. Son Wilson, who is currently an assistant professor at the Center of China Studies, Ashoka University, Sonipat. His research examines how China became addicted to land, showing how the Chinese state sought to establish itself as a monopolist landlord state. Dr. Wilson's broader research agenda delves into municipal politics in China, aiming to elucidate the influence of leadership and institutional frameworks on local political dynamics. Guiding us through this enlightening dialogue is the chair of today's session, Dr. T.G. Suresh, an associate professor in the Center for Political Studies, Jawaharlal University, and an adjunct fellow of the Institute of Chinese Studies, New Delhi. Dr. Suresh's research interests center on urbanization and labor processes in China, with a particular focus on comparative labor histories between China and India. His ongoing project explores the intricacies of labor regimes in both countries. Dr. Suresh has contributed to the academic field through published book chapters and journal articles on labor dynamics in India and China, as well as also addressing China's urban challenges. Before I hand over to the chair, I would like to request all the participants to adhere to some housekeeping rules. During the presentation, all the participants will be muted. You may post your question in the chat box, or you may raise your hand during the interactive session. And after the presentation, you will be called upon to unmute yourself and ask your questions. We request you to mention your name and affiliation while you raise your questions. I now hand over the floor to Dr. Suresh to take the proceedings forward. Over to you, Dr. Suresh.
Once again, welcome you all to this special lecture by Dr. Sol Wilson. And I'm particularly happy to join this meeting. And I'm grateful to ICS and Professor Alkacharya to ask me to chair this because of my own interest in, say, China's urban process, and also Dr. Paul Wilson's focus on, say, Shanghai. Let me say a few words before we begin, before I request Dr. Sol Wilson to start. This is an excellent area of research, especially over the last, say, 3 decades. We have seen how, say, China transformation has led to extremely unpredictable kind of economic and, say, social outcome. And we were just, say, in our conversation, just a while ago, I was mentioning to Dr. Sol Wilson that, the very strikingly paradoxical ways in which China, say, 20th century and contemporary times move around. In the 1920s and 30s, the Chinese Communist Party fought against landlordism, feudal agrarian relationship. And that was one idea that, through which Chinese Communist Party was able to mobilize, say, the rural peasant masses and able to establish their legitimacy as a leading political force in the country. And now we have the scholar with us, Dr. Sol Wilson, who is characterizing the Chinese state as a landlord state. Neither the peasant revolutionaries of the 1920s nor that generation of communist leaders or Mao Zedong, who successfully carried out that land reform and collectivization process, would have never imagined that a structural condition that they were able to establish will be now used as an instrument to establish a totally different kind of political regime. And we all know that today debates on, say, equality and other things are completely vanished from the Chinese political and economic debate. So to understand all these complexities, today's presentation is a micro level reflection on what is happening, in China's urban centers. And as already mentioned by Supradeep, the title of Dr. Sol Wilson's special lecture today is Building China's Landlord State, Laying the Foundation for China's Real Estate Boom. And since we already heard from, say, Supradeep about the brief introduction, so now I will request Dr. Sol Wilson to deliver the special lecture. Over to you.
Thank you so much, Suresh and Supradeep, for these generous introductions. And thank you as well to the Institute for China Studies for the invitation to talk today. I'm really looking forward to sharing my research, in part because I'm now based in Delhi. And it's really exciting to have the opportunity to talk to other scholars in India and to hear your thoughts on what I'm working on. So the presentation I'm going to give today, as Supradeep and Suresh have already hinted at, is about the building of China's landlord state. And I've subtitled it Laying the Foundation for China's Real Estate Boom, because although the Chinese landlord state wasn't built for the purpose of supporting a real estate boom, it ultimately served as an essential foundation for the rise of real estate in China's political economy. It's always a little bit risky to use GDP data to explain an economy, and especially to explain the Chinese economy. But I think that it's helpful in this case just for a broad brushstroke sense of how important real estate has become in the Chinese economy. So the blue line here shows you how large the export share of GDP was in the Chinese economy, and this dotted green line shows a rough estimate of real estate from a couple of scholars at Harvard and the IMF. And you can see that real estate passes up exports as a share of Chinese GDP in the years following the global financial crisis in 2007, 2008, and constitutes a really substantial share of the Chinese economy, rising through the 2000s and then reaching about a third of the Chinese economy under these estimates in the 2010s. So real estate has become really essential to the Chinese economy. And of course, that's had significant implications for the Chinese economy as efforts to deleverage have ultimately cut down on the real estate sector in the past couple of years and created a significant amount of headwinds for the economy. So this presentation isn't going to be about the real estate sector itself. It's instead going to be about the foundation for that real estate sector. It's going to be about how the Chinese state built up control over urban land. Real estate in China is primarily built on urban land. That urban land is under a state monopoly. And I'm going to ask why the Chinese state sought to monopolize urban land. I'll argue that that was done for the sake of industrial policy. The hope was that the state's ability to allocate land would serve industrial policy. And then I'll ask how the state did this. And that's a story of state building. It's a story of quite extensive state building, because extracting land from those who had it and allocating it to those the state wanted to favor through industrial policy was a protracted and arduous process. And then finally, I'll talk about how the state's control over urban land has been used. And I'll argue that this landlord state, this tool for industrial policy, was ultimately captured by one of the preferred industries, Real estate was a key pillar of industrial policy in the late 1990s and early 2000s, and it ultimately expanded to essentially capture this tool of state urban land allocation. First, though, I should define this concept of the landlord state that I'm introducing here. By landlord state, I mean the state allocation of land in support of industrial policy. And of course, by industrial policy, what I mean is an attempt by government to encourage resources to move into particular sectors. And the particular sectors that are beneficiaries of industrial policy change over time. And I'll talk more about that later. But in order for the state to allocate land, it has to have land. And so the story I'll tell today is one about the state acquiring land from villages and villagers. So taking land that looks like what you see in the foreground here of this photo of southern Kunming, and then allocating that land on to urban land users. So this is a process in which the government interacts with villages to acquire land and then interacts with real estate developers and manufacturers and the like to allocate land. So the government here is central in this process of urbanization under a landlord state. And the talk today is about building up this landlord state and then also about maintaining it. And so I'll talk first about how a national policy that sought to create a tool of industrial policy resulted in a process of state building to create the state capacity that was necessary to allocate urban land. And then I'll talk about how that state capacity facilitated industrial policy. And in particular, it was used to support an industrial policy that prioritized real estate, the real estate sector. That industrial policy in turn created a growth coalition. It created a pretty large growth coalition that ultimately became so large and so powerful politically and socially that it was able to pressure national policy to continue to promote the real estate sector. But first, we need to talk about the origins of this landlord state. At the beginning of the reform period, there was no landlord state. Rather remarkably, in the Mao era, urban land had not been fully nationalized. A lot of urban land was owned by state-owned enterprises, was owned by municipal housing authorities, was owned by government agencies, but a portion of it remained in the hands of private citizens. In rural areas, land had been reallocated to individual peasants in the 1950s as part of land reform, as Dr. Suresh mentioned at the beginning of the talk, and then had been collectivized in the late 1950s and was physically in the hands of these rural collectives. So this was a land ownership system in which land was relatively scattered in urban areas between some portion of state ownership that was actually managed by individual enterprises and then individual private ownership, and in rural areas was primarily collectivized. And there wasn't much of a land market, especially in the late Mao era, because markets were not politically correct. But as Huang Yasheng has argued about the beginning of reform and opening in the late 1970s, and especially the early 1980s, there was a period of directional liberalism. There weren't necessarily rules that facilitated market transactions. Indeed, market transactions, especially in the land market, were probably, if not illegal, were certainly questionable. But there was a broad trend towards marketization in a sense that it was politically safe to engage in market transactions. And that was true in the land market as well as in other markets. And so there's the beginning of an emergence of the land market in the early 1980s. And that early land market offends the keepers of industrial policy. The state-owned enterprises and other components of the Chinese state that were tasked with engaging in industrial policy, promoting large-scale industry, were upset to see the price of land rising as the land market developed. They were upset to find that when they wanted to take land from villagers to build new industrial estates, they needed to bargain with the villagers, and the villagers were asking for more and more. And so in 1982, when the Constitution is revised and when some of these keepers of industrial policy are put into positions of influence over the constitutional revision, they add a new article to the Constitution that actually nationalizes urban land. So the nationalization of urban land in China, formally and to some extent in certain cities practically, doesn't occur in the Mao era. It occurs at the beginning of the Reform era. Urban land is declared to be state-owned, and rural land is declared formally to be under the ownership of collectives. And so this should be the beginning of the story of the landlord state. It should be the beginning of a state monopoly on urban land. But it's not that easy to build a landlord state. It's not that easy for the state to acquire land from villages and to allocate it onward. It wasn't that easy in part because what the Reform era state inherited from the Mao era was very weak controls over land. The state had few cadastral maps. They didn't really know who had control over which parcels of land. They didn't know which state-owned enterprises owned which areas. They didn't know which private citizens owned which houses. And the state had very weak local government controls over land use. Most land use decisions were in practice being made by state-owned enterprises or whoever was physically in possession of the land and not being regulated by local governments. And moreover, the state was not particularly clear, the constitutional amendment was not particularly clear who actually owned land. It said that urban land was state-owned, but it didn't say who the state was. And it said that rural land was collective-owned, but it didn't say who the collective was. And so it was quite murky how this state ownership of urban land would actually be implemented. And to top off these problems, the primary location of growth in the 1980s was not in the cities. It was in rural areas. The miracle of township and village enterprises resulted in the rural economy going faster than the urban economy in the 1980s. And these township and village enterprises were, by definition, occurring in rural areas. And so they were being built as industrial enterprises that would, in some sense, look as if they belonged on urban land. They were being built on rural collective land. And so this state monopoly of urban land didn't include the largest industrial expansion in the 1980s. It also wasn't easy to establish the landlord state because no one had a financial motivation to do so, nor did they even have the finances to try if they wanted to. Because another component of the constitutional amendments of 1982 was a prohibition on land trades. The Constitution had banned the sale or rental of land. And that meant that local governments, if they sought to exercise state ownership of urban land, had no way to pay to acquire land from those already on it in order to allocate it onward. There simply was no revenue source from land. So local governments had no motivation to engage in this type of land development because it was a loss-generating activity. So while there was a great deal of competition for urban land in the 1980s, that competition was between different state agencies that were competing essentially for bureaucratic turf. Local governments and state-owned enterprises all sought to establish themselves as the agent of the state in the ownership of urban land, but none of them had a particularly strong financial motivation to use this to develop land on a large scale. And so what did land allocation look like in the 1980s? It certainly was not state allocation of land. Instead, what we see is end users, especially state-owned enterprises, but also other state agencies, sometimes even state-owned real estate actors, bargaining directly with villages, and the government simply playing a role as an organizer and certifier of these negotiations. So land transactions in the 1980s were primarily bargained between end users and villages, and the government was simply a regulator and coordinator of these activities. That's a far cry from the state allocation of land. It's a far cry from a system in which the state is taking land from villagers, acquiring it from villagers, and then allocating it on to end users. So how then did the landlord state get built on this foundation? The first significant change was that local governments were permitted to sell land. And by permitting local governments to sell land, local governments were able to make a profit from developing land, and that provided them with the financial wherewithal and motivation to engage in land acquisition and then land allocation. And this famously occurs in the wake of Shenzhen's 1987 auction of an individual piece of land. They auction off the land use rights to a piece of residential real estate land, and they auction it off at a relatively high price. They're very proud of themselves for having brought in so much money. And they do it even though the Constitution still prohibits the sale and rental of land. They use the fig leaf of calling this land use rights instead of land sales. But very quickly, the Constitution is revised in 1988 to permit this type of land use transaction. And local governments now have some tool to finance land allocation. But they can't charge particularly high prices because there's still lots of competing sources for land supply. You have state-owned enterprises, which continue to have a reasonable amount of land in urban areas. And you have villages on the edge of cities, which continue to sell land into the urban market. And so local governments can't charge particularly high prices. You don't see the emergence on a large scale of what has in more recent years been termed land finance. And because local governments aren't able to engage in land allocation on such a large and profitable scale, you don't see the emergence of a landlord state. The actual building of the landlord state, the emergence of the landlord state, occurs in a period from 1997, 1998 to 2005. And it occurs through a number of reforms that are promoted by the central government and that completely restructure the incentives and, in fact, the obligations of local governments. And those reforms include reforms to the land taking system, to the financial system, to the housing system, and then finally to the process by which land sales are enacted. To go back to this schematic of land being acquired from villagers by the government and then allocated on to urban land users, these reforms in the late 1990s and early 2000s put the government in the middle of this process. Urban land users are no longer bargaining directly with villages. They reduce the price that the government pays to villages, and they increase the price that urban land users pay to the government. So they put the government in the middle and they create a substantial profit margin for the government to engage in this type of real estate, or in this type of land development. These four reforms are worth going through, at least in a broad overview. One of the reforms is land takings reform. In previous years, as I described, end users, state-owned enterprises, and real estate developers would talk directly with villages. They would bargain over the price of rural land that would be converted to urban land, and the government would simply sign off. In the land takings reforms of the late 1990s, the local government is declared the only entity that is allowed to deal with villages, and the compensation system is adjusted. This process of bargaining is eliminated. The minimum monetary compensation to villagers is increased, but the requirement of providing a livelihood to villagers, the requirement of providing a job to villagers as compensation for their land is eliminated in recognition of the fact that socialist work assignments are gradually disappearing from the economy. And so the result is one in which local governments, instead of facilitating bargaining between end users and villages, are now simply declaring that land will be taken. They're to post a notice in the village stating how much the land compensation will be, and villagers are to report to the government to collect their compensation. This is a far cry from a system of bargained land takings. This is essentially an expropriative system of land takings. Another major reform is reform to the financial system. In the wake of the Asian financial crisis, Zhu Rongji adjusts the banking system to concentrate control over local branches of national banks under the hand of the central government. And that reduces the ability of local governments to access bank deposits to finance local government activities. And so local governments, if they want to borrow from banks, are now facing demands from these bank branches for collateral. But local governments don't have that much collateral to offer. What they have is ownership over urban land. And so they're able to offer land as collateral. They're able to essentially engage in a very literal form of land finance. They mortgage the land that they own in order to receive financing. In order to mortgage the land, of course, they have to have land. And so this results in a large-scale land banking operation by some local governments. Local governments go out and take land from villagers in order to have land to mortgage. At the same time, this mortgaging system provides financing for local governments to engage in more land acquisition and pressure for local governments to sell the land once they have acquired it so that they can repay the loans. So the financial reform brings in banking pressure on local governments to engage in land finance. The housing reform is another one of the main reforms from the Asian financial crisis. And after a decade or two of discussion at elite levels in Beijing, the central government finally decides that urban residents will no longer be allocated urban housing, that they will have to buy their housing on the market. And that, of course, increases demand for real estate. So as demand for real estate increases, that means that demand for land increases, and that increases the demand for local governments to the potential price at which local governments can sell their land. And so the combination of these first three reforms in 1997, 1998 to the land taking system, the financial system, and the housing system is that the local governments pay lower prices to villages. They have the prospect of higher demand for the land that they are selling, and they have pressure to financialize the land that they have. And so this adds up to a system in which local governments face larger profit margins and the financing necessary to engage in land development. And yet local governments don't engage in large-scale, profitable land development in the late 1990s and early 2000s. They don't develop a landlord state in which local governments are selling land at monopoly prices, because in the late 1990s and early 2000s, most land transactions are occurring in closed-door, backroom, bargained agreements between real estate developers or manufacturers and the local government. And especially with real estate developers, the price differential between what is being charged by the local government and the market price of real estate land is enormous. So in essence, local governments are selling land to real estate developers at bargain basement prices. And the reason they're doing this, it appears, is that local officials are receiving bribes from real estate developers to sell their land cheaper. So essentially, local officials are personally receiving some of the land value. Real estate firms are receiving a large chunk of it, and the local government is getting precious little revenue from land sales. In the early 2000s, the central government decides that this is an unacceptable state of affairs. At first, it frames this as unacceptably uncompetitive and in violation of the spirit of the World Trade Organization accession that's occurring in 2000, 2001. But later, the central government explicitly frames this as an anti-corruption problem, that local officials are simply caught up in too much real estate corruption. So what the central government does is it demands that local governments sell all residential and commercial land at auction. that these transactions have to occur in public view. And while, of course, you can continue to rig an auction, it's much harder to rig an auction than it is to engage in some sort of underhanded transaction in a closed door transaction. And so local governments, as a result of this central government requirement for sale of land at auction, are now collecting much higher revenue from land. So a combination of these efforts by the central government to push down the cost of acquiring land, to push up demand for urban land, and then to force local governments to sell land at monopoly prices while pushing aside competing sources of supply, result in local governments collecting monopoly rents on land, local governments being firmly ensconced between the village and the end user as intermediaries in the land development process. So no longer are governments simply standing by and signing off on land transactions. Now the government is really a landlord state that is taking land, putting it under state ownership, and then allocating it on the end users. And then the central government is able to use its power the local governments are able to use their power to allocate land to support industrial policy. So how is the landlord state used in practice? Well, it's used to support a couple of different types of industrial policy. And it's a particularly interesting set of tools. The landlord state is a particularly interesting tool because it is self-financing as a form of industrial policy. The landlord state serves two broad industrial policy pillars. The first is for manufacturing. Manufacturers go where factors of production are cheapest. They go where land is cheap. And so local governments need to provide cheap land to recruit manufacturers to their jurisdiction. So local governments would provide essentially free land to manufacturers. Sometimes they would provide subsidies that essentially made the land a negative price. But local governments need revenue to pay for that type of cheap land or free land. And they would get that revenue by selling land to the real estate sector. Real estate was at this point another key pillar of industrial policy. Part of the housing reform of 1998 is that Zhu Rongji explicitly, and he says this in just as many words, seeks to use real estate as an industrial policy to ensure continued economic growth in the wake of the Asian financial crisis. So the development of the real estate sector is itself an industrial policy, but real estate is distinctive from manufacturing in that real estate investment tends to be concentrated in places with higher land values. People want to buy houses where values are going up, not where land is cheap. And so local governments were able to sell land at high prices to real estate, which would attract even more real estate investment. They could then use the revenue they earned from real estate to cross-subsidize the cheap land that they were allocating to manufacturing. So this was a very powerful tool of industrial policy that promoted both of the main pillars of industrial policy in the late 1990s and early 2000s. And it was an extremely lucrative tool of industrial policy. This graph shows you the ratio of land revenue, land sales revenue, to on-budget revenue. So the numerator is land revenue, the denominator is tax and fee revenue. Tax and fee revenue was the predominant source of revenue in the 1980s and 1990s. And land revenue spikes rapidly in the early 2000s. It's very clear that land revenue increases in the wake of the central government campaign to force local governments to sell land at higher prices, to force local governments to extract monopoly prices from their land. And by the early 2000s, by the mid-2000s, local governments are receiving half as much revenue from land sales as they are from their entire tax and fee budget. So land sales become a very, very large share of local revenue. So local governments are, of course, extremely excited about the shift towards real estate, and they become a key proponent of a real estate growth coalition that develops in the 2000s. Another key proponent is, of course, real estate developers. Real estate developers make their money off of selling houses, and as long as land prices and housing prices continue to rise, and as long as housing prices rise at least as fast as land prices, real estate developers can make lots of money. And so they're eager supporters of real estate. And homeowners as well have just seen their urban houses privatized, given to them often at bargain basement prices in the 1990s. And now, as long as the real estate sector is growing, as long as that leads to rising housing prices, these homeowners benefit dramatically from rising housing prices. So the bulk of these urban residents who had been urban residents in 1998 at the moment of the housing reform are benefiting from rising housing prices and the Real Estate Growth Coalition. The Growth Coalition is large, but it has one notable set of opponents, and those are the people on the edge of the city whose land is being taken at expropriative prices in order to feed this Real Estate Growth Coalition. So these peri-urban villagers are losing their land, getting very low compensation, and they put up fierce resistance as a result. They petition, they protest, and they sometimes even riot. So this is an image of a riot in Guangzhou, where land was being taken at expropriative prices from villagers in rural Guangzhou to build a university city that some of you may have been to. And the villagers rioted, and the police, you can see here, have been sent in to maintain order and to ensure that the land is extracted. So this occurred nationwide, and it fed into the perception that there were significant political risks in the countryside. And this comes eventually to be labeled the three rural problems. These three rural problems are rooted in high taxes and fees that are being charged to villagers, but they also include the perception that villagers are being expropriated in the land takings process. And so this three rural problems creates a broad political support at the center for more pro-rural policies. In the case of taxes and fees, those pro-rural policies take the form of the abolition of agricultural taxes. But in the case of land takings, it would dramatically undermine the urbanization project if there were simply to be an abolition of land takings. Instead, we see a gradual increase in the compensation that is given to villagers when their land is taken. So in around 2000, in the late 1990s, early 2000s, there are no official statistics, but it's widely believed that the compensation given to villagers is somewhere in the range of 5 to 10% of the total value of the land when it's ultimately sold on to end users. This is a very low share of land revenue that municipal governments are passing back to the villagers who originally sat on the land. By 2007, when official data becomes available, it looks to be around 30%. And by 2013, when we see a peak in the share of land revenue that's going to those who were originally on the land, it's over 50%. And so the share of land revenue that's going to villages goes up dramatically. Now, of course, not all of this money necessarily makes it to individual villagers, but there is a noticeable shift in attitude towards land takings. Guangzhou is one of the most extreme cases, of course, where they go from having riots because land compensation is so low in the early 2000s to a situation where villagers compete to attract more and more lucrative land takings compensation in the 2010s. And ultimately, you see scenes like this, where villagers are celebrating the compensation they receive after their village has been demolished and relocated. Of course, not everywhere in China does compensation get as high as in Guangzhou. The real estate market isn't as valuable everywhere in China. And more importantly, the politics of land compensation varies from city to city. But the broad national pattern appears to be one in which compensation goes up over the course of the 2000s and into the 2010s, as villagers move away from this, as the government moves away from this expropriative model of land takings to one that is more generous to peri-urban villagers. And that results in a much broader real estate growth coalition. Local governments and real estate developers and homeowners are, of course, still members of the coalition, but now peri-urban villagers are profiting from land takings. And so they seek to be included in urban development. They, of course, bargain for higher compensation, but they also seek out opportunities to have their land taken. And this increasingly broad real estate growth coalition ultimately pushes out other sectors of the economy. It pushes out manufacturing and exports in part as a result of the 2008 global financial crisis. That crisis dramatically undercuts the market for Chinese exports, at the same time as threatening China's growth rate. And so the central government promotes a very, very large stimulus, the 4 trillion renminbi stimulus. It is, of course, in practice, much larger. And that stimulus includes multiple facets. And the two most important facets of that stimulus are to encourage real estate investment, to reduce taxes on, and to push consumers to buy more houses. And so there's a massive increase in the real estate market in 2009. And at the same time, local governments borrow against land, because another component of the stimulus effort is to encourage investment in infrastructure and to encourage that investment to be conducted through local government borrowing. Local governments, of course, as I mentioned earlier, have land as their collateral. And so we see local governments borrowing ever more against that land. As they borrow against land, local governments essentially guarantee the land and housing markets, because everyone understands that local governments will need to repay the mortgages they have placed on their land. In order to repay those mortgages, they are going to have to ensure that land and housing prices continue to rise. That means that there's an implicit government guarantee on housing and land prices, and therefore housing becomes an extremely attractive investment. So the growth coalition is now a broad one, with local governments, real estate developers, homeowners, and peri-urban villagers. But there is still some opposition. Increasingly, as housing prices reach stratospheric levels, prospective homeowners become skeptical and concerned and opposed even to this real estate growth coalition. They can't afford to buy houses in cities. They're frozen out of the opportunity in these cities. At the same time, the central government also gets concerned. It gets concerned both for the ability of people who remain in the countryside to urbanize, and also because of a perceived macroeconomic threat from an excessive focus on real estate. And so we see efforts by the central government throughout the 2010s to reduce the dependence of the economy on real estate. These efforts begin right after the 2008-2009 stimulus with significant efforts to tamp down on housing prices, especially in Beijing, through putting controls on the purchase of houses, limiting who can buy houses and how many. And these are relatively successful at restricting real estate prices in the early 2010s, but they're ultimately loosened and result in another period of real estate price increases. The central government then turns its concern to local government debt. It becomes increasingly worried that local governments have borrowed too much as part of the central government's stimulus plan in 2008-2009, and attempts to create a system in which local governments will have to move that debt from off-the-books borrowing through local government financing vehicles into on-the-books and more transparent local government bonds. And does this in 2014-2015, but it does so in a period in which they attempt to reduce local government borrowing very aggressively. It appears to work for a few months, but then ultimately runs up against economic headwinds. And the central government, in order to promote the economy, especially in the wake of the stock market crash of 2015, once again tolerates a large amount of local government financing vehicle borrowing. And so these local government financing reforms, again, fail to rein in the dependence of the economy on the real estate sector. In the late 2010s, in 2017, 2018, the central government pushes local governments to impose straight-up price controls on real estate. And so the result is actually that new house sales wind up being cheaper than secondhand house sales. And local governments have to set up lotteries to allocate access to these new houses. And this does reduce the price of real estate, but it does not completely dampen enthusiasm for the real estate sector. In fact, when you think that you can get a house below market value, you're liable to be even more excited about buying a house. And so demand for real estate remains strong. And it's only in 2020 when the central government decides to crack down on real estate developer financing. It moves away from controlling the ultimate purchaser through these house purchase controls and housing price controls. It moves away from trying to restrict local governments through local government financing reforms, and instead decides to target the largest private actors, largest private corporate actors in this scheme, the real estate developers, and cuts down on their access to financing. And of course, these real estate developers were highly leveraged. As soon as they lose access to financing, they become unable to continue to build houses. And so some of the largest real estate developers, especially the most heavily leveraged ones, such as Evergrande, begin to fail. And we see a dramatic collapse in confidence in the real estate market. As real estate developers fail, it becomes apparent that housing isn't such a safe investment as homebuyers had previously thought. Demand for housing reduces substantially, and we see this precipitous fall in housing starts, in housing sales, and in real estate investment starting in 2021. And so it's in this process that we see that the central government finally does manage to break apart the real estate growth coalition. It manages to stop this focus on real estate, the use of the landlord state to promote real estate development. But it does so at a point once real estate has already become extremely central to the Chinese economy. So the landlord state was the product of an effort to build up state capacity to develop industrial policy. It was an attempt to use land as one more carrot of industrial policy. Other countries often use cheap access to capital or cheap access to labor. In the Chinese case, not only did they provide cheap access to capital and labor, but they also sought to provide discounted access to land. And they sought to finance this through another component of industrial policy, through the real estate sector. But ultimately, the real estate sector essentially captures the tool of industrial policy, and the landlord state increasingly gets used exclusively for real estate and less for manufacturing and other forms of industrial policy. In recent years, though, in the wake of the decline of the real estate sector, it's quite interesting to see the same tool remaining in use, but increasingly being used now to promote, once again, the manufacturing sector as a tool to promote things like the electric vehicle sector, to provide them with cheap enough land that they're able to engage in expansion of their businesses, and the state is able to promote its industrial policy. So I'll stop there. I'm very much looking forward to your questions and comments, and I'll hand it back over to Suresh.
Thank you, Dr. Saul Wilson, for that excellent presentation. The clarity of your explanations, especially taking us through the evolution of China's post-reform land and industrial policy, was very enlightening. Before I open the floor for discussion, there are three things which is in your presentation is very important. First of all, what you mentioned, the kind of the regime inheritance, the fragmentation of, say, collectives and rural enterprises would have led to only one particular trajectory of a land becoming, coming under the monopoly of the state. Had it been some other trajectory, just speculating retrospectively, conceding user rights to people and eventually accepting their legal rights of the land would have created a property owning class of people who may not have really land legitimacy to the state. Second issue is, in your presentation, the formation of a growth coalition and the social actors who joined and left. And yeah, so growth coalition usually in many literature is a reference to even within CPC, there are, say, leadership coalition for a particular kind of, growth. But in your case, in your presentation, you have, say, mentioned how the, diverse social actors, where when their interests are kind of intersected, for the home buyers and etc. So there emerged a growth coalition, which also provided substantial, kind of a social, say, legitimacy because, as you meant, this is also very useful to hear from you that the land acquisition in China had there are, say, farmers who are not very happy with that. At the same time, those who have been able to receive a substantial compensation, they did not have a serious problem, especially in Guangzhou, say, province. And then one, question, maybe, we can start with this, that the although we thought that Chinese government has the enormous institutional capacity to micromanage economy and social relations and etc. We are let a highly speculative, unregulated, sector to emerge, and after a certain time they lost control over it. That otherwise, how the kind of the crisis they are in today. So this is also about to say a state-led industrialization, state-led reforms, finding now difficult how to say uh, how to restore certain regulatory norm in the policy. And also the way many people in the urban areas, they were also become active investors in real estate, and then say started buying apartments, two apartments in one city, a few in another city, and in course of time they're now sitting with a lots of, say, apartment which they are not able to sell. So anyway, with all this thing, I mean, it is an enormously useful, helpful, insightful, special lecture we had now. And now I open the floor for discussion. Those who have a question, just raise your hand, and then you can ask directly to Dr. Sol Wilson. Yes.
While people are thinking of questions, I can answer a couple of your comments here, especially your first question about sort of what would an alternative institutional structure have looked like. And one of the most interesting things I stumbled across in this project was that in the early 1980s, in 1980 itself, actually, Deng Xiaoping begins to push for housing reform. This is 18 years before housing reform is actually implemented nationally. And the housing reform he proposes is a little bit different from what Zhu Rongji actually implements. First, he's very explicit that he wants housing reform and construction and a broader construction industry because he has seen that in other countries, in the developed countries, construction and housing constitutes a large share of the economy, that they are pillar industries. So he wants to develop the housing sector and the construction sector as industrial policy. But then the second component is that he sees a variety of ways in which housing can be built. He doesn't just see a system in which the state will build housing. That's what they had been doing up until then. And he doesn't just see a system in which the state will build housing and then sell it to state workers. At that point, it's a little hard to imagine large-scale real estate developers because this is 1980. There are no large-scale private firms. Instead, what he imagines is that the state will provide individual pieces of land to individual citizens who will then build their own houses. And this is attempted in the early 1980s. And in fact, it's relatively widespread across much of China into the 1990s. In cities that aren't the ones that foreigners normally go to, in smaller county seats, in county seats generally, and in smaller prefectural cities, a lot of the housing construction was done by individual urban residents who would build their own houses. And that's a very different model of urban development. It's one in which people are building their own settlements. You don't get large high-rise buildings. You don't get these large gated communities. Instead, you get this focus on individual houses that are built much in the same way that many developments in India are. And these ultimately get pushed out by real estate developers. Partly real estate developers outcompete them. People turn out to prefer to live in high-rise buildings. There's more status involved. Perhaps the quality of construction is better. Another component is that local governments prefer to deal with real estate developers. It's a lot of work to manage a large number of individuals building housing. It's a lot easier to manage individual real estate developers. So that's one alternative model. And another very interesting alternative model that comes up for debate several times is one in which villages would be allowed to sell their land onto the urban market. And that's even foreseen to a certain extent in the 1988 constitutional amendment, where they allow land transactions. They don't forbid village land sales in that amendment. They just never establish rules to facilitate them. And so in certain parts of the country, the development of village land for urban development is encouraged. In the 1990s, Guangdong encourages this type of development. In the 1990s, it's also widespread in a place like Jiangsu. But by the end of the 1990s, as part of these land takings reforms that are adopted in 1998, they rule out any village sales to urban land. So, and at that moment, there is a bit of debate. The Land Management Bureau is believed to have proposed legislation that would have facilitated village land sales, or at least more of a market-based land system. And that system is ultimately rejected. It's unclear at what stage of the legislative process. And instead, a total ban is imposed on village land development for urban purposes. So it's really at this juncture in the late 1990s that they decide to completely freeze out villagers and to focus on a much more urban model. And then, of course, the three rural problems and some of the protests that develop in rural areas begin to push the system back a little bit more towards rural inclusion in land development. But there are moments where they consider alternative systems and reject them.
Thank you. So I thought, so Pradeep?
Yes, so Dr. Suresh, there is only one question in the chat box. So I'm reading out the question.
Yeah, please do.
Yeah. To what extent did reorganization of fiscal distribution system in 1994 between central government and provincial or local governments, which saw local government's share of tax revenue decline to less than 50%, despite no change in expenditure burden, that were further reduced as local fees and then the millennium old agricultural tax and abolished in the 2000s, sparked the unsustainable financing of local government expenditure through the local government financial vehicles. A certainly directed fiscal dominant policy that has led not only to the current real estate market crisis, but also a crisis in local government finance. This question is by Mr. Sandeep Hasurkar.
Thanks, Sandeep. So this is a very popular explanation for the emergence of land finance, that local governments were essentially impoverished by the 1994 tax sharing reform that the central government foists on them, that they are then forced to turn to alternative sources of financing because they've lost so much of their tax revenue to the central government, and that they turn to land as an alternative source of financing. This is, as far as I can tell, not supported by the evidence. If we look at the graph that I showed in the presentation of land revenue as a share of total tax and fee revenue, there is no pronounced increase in land revenue in the wake of the 1994 tax sharing reform. There's a brief rise in land revenue in the wake of the Southern Tour when there's a significant real estate bubble at Hainan and a couple of other places in South China and northeastern China. But as that bubble is burst in 1993 and 1994, the share of land revenue in relative to non-land tax and fee revenue declines back to around 10% for the rest of the 1990s. And so in this period when you would expect to see a rise in revenue, if the 1994 tax sharing reform were the cause of the shift to land finance, we simply don't see it. When we do see that rise, it's when the central government forces local governments to sell land at a high price. And so it's when the central government is forcing local governments to use auctions, it's when the central government is forcing local governments to enforce their monopoly on urban land that we see this rapid increase in land revenue as a share of total revenue, or as a share of tax and fee revenue in the early 2000s, from about 2001 to about 2004 or 5. And so it's pretty clear that it's not the 1994 tax sharing reform that causes this shift in government finance. That's not to say that the 1994 tax sharing reform doesn't play its role. Of course, local governments' need for revenue is made, bureaucracies always want revenue, but local governments become even more eager to have revenue in the wake of the 1994 tax sharing reform. And so they probably cling to their land revenue even more enthusiastically, but they don't do so of their own accord. They have to be pushed by the central government to move towards land revenue. And then once they have it, they cling to it for dear life because that becomes their major source of revenue. It's built into their business model by the 2000s. But it's not like local governments are responding to a shortage of funds. There are certainly individual local governments for which this is probably true, but at a broad national level, there doesn't appear to be any evidence for that pattern.
Dr. Wilson, I have one last question. What in your opinion, what do you think will be the future of this landlord state? What I'm asking is, it appears that the Chinese landlord state is no longer the landlord state because for the last 30 years, ever since they have started this process, large, vast expanse of urban or even peri-urban land have been the user right has been transferred to real estate firms, and real estate firms have transferred the ownership rights to the home owners, etc. And then and homeowners are the de facto owners of in most of this. And even in rural areas, village resident, they have their rural hookup. So if the Chinese state had an enormous land under their control, and now I don't have a data about that, but how much land the Chinese state effectively own, having over which it can exercise some monopoly in terms of transferring user rights or those kinds of things. So and along with that, the other question is, since they have been developing this real estate as a market, there are the terms they have used, like housing market, real estate market, etc., etc. However, by definition, market is supposed to be self-regulating. But in Chinese case, the state did not think about it. It had this complete, say, confidence in itself. So, but now the market is actually got out of hand. Neither it doesn't have an internal mechanism to self-regulate itself through our pricing or etc. The larger section of the home buyers who were part of the growth coalition also now become alienated. And the state has, state look like the Chinese government has, their, options, to move forward with respect to land question and urbanization. What are your insights about this? Although it is we can only speculate, but since you have this.
Well, that was a lot of questions. The landlord state is a complicated label to put on this, because there are moments when the state is at its peak landlord level. And that's probably in the late 1990s and early 2000s. It's at that moment that the state is expropriating land from villagers at the lowest possible costs and allocating it on in support of industrial policy. By the 2010s, the profit margin that the state is earning off of land transactions is much, much smaller, because they're providing much higher compensation to the people from whom they're taking land. And so the landlord state starts to look quite different in more recent years. But at the same time, the extent to which the state monopolizes access to developable land, in some sense, increases. In the 1990s, there is still significant leakage of rural land into the urban land market. It's not officially urban land, but it is being used for urban purposes. And so in the 2000s, a city like Shenzhen, so I've got a picture of downtown Shenzhen behind me. A city like Shenzhen in the early 2000s has half of its floor space is developed on rural land. These are urban neighborhoods in Shenzhen. If you look at them, they look often more dense than the areas that are legally on urban land. And so there's a huge amount of competition with the state's land allocation in the earlier years of the landlord state. At this point, the state is much more effective at controlling what gets built on peri-urban and downtown rural land. And so if you want to redevelop a village that's downtown or near a city, you increasingly have to go through the state's system. And the state increasingly demands that the land be sold first to the state and then allocated on by the state. So the state's role here becomes increasingly large. But then you ask about the fact that a large amount of land is actually held by homeowners or by real estate developers. And particularly once land is in the hands of homeowners or in the hands of condominium associations, it's extremely difficult to take it away from them. Officially, land is sold as land use rights. The ownership rights remain in the hand of the state. The state maintains its nominal claim to ownership over all urban land. It retains its claim to being a landlord. And then the land itself is permitted to be used for a certain number of decades by the homeowner or by the real estate developer or the manufacturer. In practice, some of these leases have begun to expire. In the case of manufacturing, when they expire, often the government takes the land back. But in the case of residential developments, the government will often decide that it's not going to take the land back. The costs of displacing large numbers of homeowners are really more than the government wants to face. And so in the first cases where housing land use rights expired, the government simply extended the rights at no cost and allowed people to continue to live in and transact the houses that they were living in. And so homeowners are, as you say, de facto owners of the land that is under their house. The government does not show an eagerness to exercise its claim to ownership over that land. And it's unclear what will happen in the long run as more and more urban areas are subject to expiring land use rights. it's clear that the government is going to have to find some sort of alternative source of revenue, but what exactly that will be, whether it'll be a property tax or whether it will be something else, is unclear. And so how exactly the state will continue to exercise its nominal ownership over urban land rights is unclear. What is clear, though, is that the state continues to use its ability to allocate some land, what it does have in its ownership and what it does take from villages, to support industrial policy. And so when you talk to local officials, they're continuing to allocate land on to manufacturing enterprises and the like. And in many ways, the landlord state has moved back to the model of what it was supposed to be in the 1990s, where it's a tool to support manufacturing and a tool to support industries other than exclusively real estate. So that was a long and indecisive answer to your question, but I think that's the most clarity I can offer.
Thank you. Yeah, now, so Pradeep, since our, say, most participants are still processing, the rich ideas presented by Dr. Wilson. Yeah, so.
Yes, Dr. Suresh, there is another question from Dr. Bhim Subba. So he is asking that how does the landlord state operate in the minority or autonomous regions vis-a-vis land relations? Is it similar to other regions or provinces? If not, then how so?
This is a very good question, Bim, and I don't have an answer for you. I haven't conducted field work in anywhere that is minority majority, and so I can't give you a particularly good answer. From reading the literature, my impression is that in many areas it's quite similar, that it is a relatively national pattern, but I can't speak with any confidence about specific minority areas. It's a good question.
So currently we don't have any other questions. So
yeah, okay, then I on behalf of ICS and everyone who has joined this as a special lecture, I would like to thank Dr. Saul Wilson for this excellent presentation. And then for the final words, so Pradeep, you have any announcement?
Yes, thank you, Chair. I seek your permission to formally bring an end to today's session. With this, we would wrap up the session, and we thank Dr. Saul Wilson and Dr. T.G. Suresh for giving us their precious time and gracing the seminar with their valuable insights. The video of today's discussion will be available on the ICS YouTube platform. We extend a warm welcome and invitation to all the upcoming Wednesday seminar titled Swaying in the Middle, China in Myanmar's Peace Process. Details about the seminar can be found on the ICS website, or you could also subscribe to our newsletters for timely updates. Thank you for joining us.